But only 20 minutes.
Only 20 minutes. All right. So in this podcast, we're going to go over the financial statements, financial estimates in our business plan. You can download our business plan at wefunder.com/capital partners. You can go to our website, capitalpartners.io. You can find us on LinkedIn, and it might be on those. I'm not sure if it's going to be on those, but it probably
Either way,
is.
Our link to the website is on Instagram, Twitter, LinkedIn, Facebook, and that's it.
All right. So let's kind of dive into this. So we had a struggle the last time we tried recording this because I didn't have everything up. Anyways, so pretty much the general gist you need to understand is we're trying to acquire more and more properties each year, kind of at an exponential rate, or as soon as we can acquire them. So I kind of want to walk you through, and these are all just estimates. So just kind of know that it hasn't happened yet. They're just estimates. We just wanted to walk everyone through because some people might not be able to, read these business plans, read these financial estimates, and stuff like that. So we wanted to make sure everyone knew kind of what was going on. So right now I'm looking at the financial tables, and I'm going to go over to assets. And so I'm going to tell you pretty much each year how we plan to acquire each new asset. All right, so year one, we plan on fundraising, and we're going to do this in a few weeks. You can go look at our previous podcast. We talked about fundraising and just kind of general concepts. It wasn't too focused. It was just a podcast, just us talking. Anyways, so we're going to raise $1,070,000, hopefully by the end of May 31st, 2019.
To finish funding and get a goal.
As soon as we fund, we are going to acquire a new property at about $4 million in value, and so that's going to be the appraised value. We're going to make sure that we are sticking to appraised values, because there's a lot of people out there that just kind of throw ridiculous numbers and expect people to buy their apartment units. Anyways, we think that's about the average number for a good deal, especially in an opportunity area. We're not looking at Manhattan
or someplace in
We're looking at
exactly.
opportunity zones, so that's about average from what I saw, average of what we're looking at. So that's kind of default. I put asset values at $4 million, and so we're going to use the $1 million we raised as the down payment, 20% down payment. We're going to get the other $3 million from the bank. Anyways, we're going to acquire property one in 2019. Now, property one is going to get us. Let me go check. You can look in the business plan and you can see how much money Property One plans on getting us. So I think
in revenue,
I think it was like
300,000.
300,000?
Yes.
Okay. Yeah. So that's going to get us about 300,000. Now understand that that's about half of the year. So it's going to be a little bit less than a full year. So 300,000, and we're going to save that money to acquire a new property in 2020. So in 2020, we're going to use the money we saved from 2019, the 300,000, plus we're going to make extra money on top of that. But at the beginning of 2020, we plan on having another private fundraising round, so that's probably just going to be accredited investors. And pretty much there, we're just raising more money to acquire a new asset because, as we said, we kind of want to acquire more and more properties each year. So we're going to use the fundraising round that we had in 2020, at the beginning of 2020, to acquire a new property. And so that'll increase our profits, and we're going to take the profits from those two properties, and we're going to buy another property at the end of 2020. Or just at some point in 2020. We're not sure exactly when. We're just putting it as 2020. Anyways, in 2021, we plan on buying 2 more properties again. And so we're just going to take the income. We no longer are looking for, we're no longer looking to raise more capital through investments and stuff like that. At that point, we're just going to be taking money from the bank.
Yeah, exactly.
Yeah. And then in 2022, we're planning on acquiring 3 more properties based off of all 5 of the properties that we've already acquired. At that point, we should have 8 properties. And so in 2023, we are estimating, based off of the success off of all previous 4 years, that we'll have a total of about 12 properties. And so all of those are going to be around $4 million in value. And so you go look at our financial estimates, and you can see that. Anyways, what else do we need to talk about? Talked about how we're acquiring properties. Let's go talk about how I'm going to split up the financing. So or how we're going to split up the budget. Can you go back over to the financial? All right, so pretty much for each property, they're going to have the same budget. Now, it might not be exact. You got to go down. Yeah, there we go. It's not going to be exact, but it's going to be very close. So about 50% is going to be, or 50% of the expenses. This isn't, this is not talking about the profit. This is just pure expenses. 50% of our expenses is going to be going to the loan expense to increase our equity in the property, or increase the valuation of our company, because our company will then own more assets. So we'll be buying more equity in the property from the bank. Anyways, about 20% is going to go to taxes, and then about 11% is going to go to salaries, and then the rest, so administration fees, advertising fees, insurance fees, repair fees, legal expenses, management fees, utilities, that's going to go into about 20%. That's going to be about a combined 20%. Of our expenses. Yeah. So that's pretty much the budget, and that should be pointed out. There's not an actual pie chart on the business plan, but we will try to put our financial statements or our financial estimates on the actual WeFunder campaign. So you can go look at that, and you can kind of see all the information that we have and how we're getting these estimates and stuff along those lines. So let me just do a quick scan through this, so you can see what we're using for expenses. And so let me just kind of go talk about profit, or can you pull up the profit chart? Or just your profit loss sheet. So you gotta look at our profit loss sheet, so I'll kind of talk about this. And so we're just gonna do it by year. It's kind of hard to estimate these months. Anyways, so net profit we're estimating from 2019 to be about $300,000. 2020, based, if we follow our plan, and we fully intend on following our plan, then we're estimating about 1.5, and of course we're going to be reinvesting all of this. So we're going to take what we earn and we're going to reinvest it. That's kind of one of the reasons we're not offering dividends at the moment, is because we want to hit our valuation cap, and we just kind of we just want to. Yeah. Anyways, so you can go look at the net profit from there. It's all estimated. I think our estimates are, pretty detailed. You'll like them. Anyways, that's about it for the financial summary. I wanted to go over that really quick, just so everyone could see and everyone could be on the same page. So go look at it yourself, and just know their estimates. There's risk involved, so there's a chance that we might not hit these estimates, but I fully intend on hitting them. That's why I wrote them on paper. I don't think they're ridiculous, or I wouldn't have wrote them on paper. Anyways, that's it for this podcast.
That was
That was fantastic.
La vista.